Today marks International Women's Day, celebrating social, political, and economic achievements of women. JPMorgan out with a new report on the global state of gender balance in 2024. The report finds we've seen post-pandemic gains, but far from parity. Joining us now, one of the authors behind that report, Joyce Chang, chair of global research at JPMorgan. Joyce, it's great to have you back on the show. This report outlines 10 facts about this global state of gender parity in 2024. And I want to start with number one, especially on a jobs day, because it's all focused on global female labor force participation rates hitting record levels. That's something we did see in the February data this morning for the U.S. jobs report as well. We saw that participation rate tick up. What I'm curious about is why. Is this that there's more opportunity for more women in more workplaces, or is this a reflection of a higher inflation environment, not just here in the U.S., but across the world, and more need for more income?
So I think it's a combination of all of those things. But one of the big changes is the flexible work arrangement. So if you take a look at the period that goes back to like 2017 in the female labor force, it was about 25% work from home. And now you're up to 41%. So that made a very big difference. But you're absolutely right. The higher inflation is part of it. Women were hit disproportionately during the pandemic because they're in the services sector. And what we've seen is just services demand coming back up, services inflation actually running higher as well, and the need for more income. So, there's a lot of gains that have been reported this year, but the story on parity is not as positive.
Okay, so let's talk a little bit about that, right? Because we've got more women's on boards for the S&P 500 than we've ever seen. We see the gender pay gap in the U.S. declining to a new low, but to your point, we still have so much further to go.
Yeah, I think there's a lot of differentiation when you look at the higher paying jobs. So, if you take a look at finance, you still have the second largest pay gap on record. And so it depends on what level you're talking about as far as where women are at, in the food chain. And I think that's what part of the problem is. You really need to develop that middle pipeline. And so women on boards looks very good at 33.5%, but women at the CEO level is only 9%.
So moving now to a general macro perspective, I think last month you said you expect the first rate cut in June, but I wonder how many do you see, and do you still think June?
We are still sticking with June, but we've taken the second quarter growth number up. And, look, what we're seeing is better than expected growth, higher than expected inflation. I always thought that March was much too early as far as what the market had been pricing in. So I think you've had this pendulum swing. The question is it really a head fake? But I think, if you continue to see tight labor markets, and now you are seeing that women are a big part of that. The labor force participation rate is actually higher than it was before the pandemic now, the female labor force participation rate. So I think that could take some revisiting as we continue to look at the data. It's very data dependent still.
And how many cuts do you expect in 24 now?
So, we're still looking at, are you looking at 3 to 5 cuts? 5 cuts over being the official House view, but a real active debate going on right now. I do think that there's room for the Fed to be a little bit more patient here.
I'm just looking at some notes from you and Joyce, and it's interesting because you're talking about soft landing as the consensus view for 2024, but the idea that maybe a recession in 2025 is a possibility. I guess walk me through how you see this potentially playing out.
Well, look, I think that, first of all, the U.S. is looking good, but the rest of the world, you've seen some disappointments. And even within the U.S., you're seeing a disconnect between a lot of the macro and the micro data. So the credit card delinquencies, the auto loans. And even though we've taken the second quarter up, I still think in the second half of the year, you're bound to see more of a slowdown that's coming. And there's still a lot of focus on the fiscal deficit numbers, also on just debt sustainability, which I think is contributing to just a debate also on where yields are going to settle.
So what's the impact that you're modeling for artificial intelligence, even as we see the market ripping higher with some of the more prominent names powered by that?
Look, there's a whole debate on AI and what it means for productivity. I actually think that this year, the real productivity story has come from the labor productivity and the strength of immigration, which a lot of people did not have in the forecast. But when we look out till 2027, we're seeing AI investment that's going to be at least in the order of, $145 billion. But you've got to see if, what is scalable here. some of these, I think with AI, you have the ability to really go beyond single use cases. But I think the productivity numbers, it's still early to point to what those are.